Welcome back to Crypto Meets AI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. You know the routine. Now let's get into this. And I think it's pretty strange that Linklogis announced a partnership with XRP and their stock price jumped 23%, but XRP's price didn't move much at all. What do you think? Price manipulation? And what does Ondo know that the rest of us would like to know? In 7 days, U.S. markets become truly global. Pretty cryptic message if you ask me. Ripple just went global through the back door. While the world was distracted, Ripple quietly invested in Tazapay, a Singapore-based payments giant moving $10 billion annually across 70-plus markets. This isn't a startup play. This is the new Swift, and XRP is the engine. What is Tazapay? Tazapay is a cross-border payments infrastructure platform. It offers local collections and payouts, virtual bank accounts, fiat to stablecoin settlement rails. It's not crypto native, it's bank facing, and that's why Ripple jumped in. The numbers: 10 billion in analyzed volume, growing 300% year over year, expanding into the US, UAE, Hong Kong, Japan, and Australia. Licensed, regulated, compliance first. Ripple isn't investing in hype. It's locking itself into the compliant last mile rails of global trade. The strategic play. Ripple's biggest challenge has never been tech. It's last mile access. How do you turn XRP liquidity into payouts at a bank in Jakarta, Lagos, or Mumbai? Answer: Tazapay. It bridges local fiat systems plus stablecoins plus RippleNet. This deal wasn't just Ripple. It included Circle Ventures, issuer of USDC. Why? Because they're quietly building a two-pronged stablecoin plus XRP liquidity grid that makes Swift irrelevant. Swift isn't being upgraded, it's being bypassed. Ripple's SVP, Eric Jack, he called Tazapay a clear leader in compliance corridors. Translation: Ripple doesn't have to fight regulators anymore. It plugs XRP into already licensed pipes. This is how the flip will happen: quietly, legally, globally. Look at the regions: Singapore, APAC hub; UAE, Middle East bridge; Japan, SBI and Ripple alliance; US, Wall Street integration. Ripple plus Tazapay isn't regional, it's full spectrum coverage of the world's liquidity hotspots. The bigger picture: Swift moves 150 trillion a year. Ripple doesn't need to replace it head on. By embedding into companies like Tazapay, Ripple builds parallel corridors until one day the world wakes up and realizes they're already on XRP rails. Ripple's investing in Tazapay is not a headline, it's a warning shot. They're not building crypto products, they're wiring the global financial reset, one licensed corridor at a time. And if you found this information valuable, please comment, share, like, and subscribe. And just in, the UAE royal family set to acquire $700 million in XRP via Citadel Public Mining Group. One of the world's wealthiest nations is stacking big, and this is massive for XRP. Solving the quadrillion-dollar problems: Swift, XRP, HBAR, and XDC. DTCC, XRP, XLM, and XDC. Fed, XRP. ESDR, XRP, and XLM. RWAs, XRP, XDC, XLM, and HBAR. ISO 24165, DTI compliant coins. TC68, licensed crypto to finance DTIs. ISO 222, TC307. 222 World Financial Reset. TC307 rulemakers. The U.S. Department of Commerce will start publishing economic data on the blockchain. This is the movement we've all been waiting for. Public data on-chain at scale. Bullish as ever on XRP and HBAR. The rails are being laid in real time.
Two more things. The Department of Commerce is going to start issuing its statistics on the blockchain because you are the crypto president, and we are going to put out GDP on the blockchain so people can use the blockchain for data distribution, and then we're going to make that available to the entire government so all of you can do it. We're just ironing out all the details so we can do it.
Using blockchain technology will make it a level playing field. And the transparency and audibility, I believe blockchain technology and DLT will be completely embedded within the U.S. financial system. And every time the Fed cuts rates, crypto crashes. Then it moons. Is this rigged or is it a playbook? This is the pattern they hope you miss. The setup: out of the last 5 Fed rate cuts, crypto dropped in 4 of them. Why? Because when the Fed cuts rates, traders often sell the news. But here's what comes after the dip. The initial shock: rate cuts sound bullish, but markets hate surprises. Each of the last cuts triggered a short-term panic. 2020, 30 to 50% crash. 2024, 3 to 15% dips. People sell risk before they understand the upside. Liquidity changes everything. Once the dust settles, rate cuts mean one thing: cheaper money, more risk-taking, weakening dollar. Crypto loves that combo. Then comes the rip every single time. Once liquidity kicks in, Crypto rebounds fast. BTC up 300% post 2020. Market cap surged 15 to 25% after each 2024 cut. These dips were traps. The rallies were generational. Volatility equals opportunity. Rate cut sparks chaos. Liquidations, fake outs, FOMO. But if you expect a dip, you can buy when others panic. That's how smart money wins. Price versus calm, and context matters. In crises, 2020, huge crashes, insane rebounds. In stability, 2024, milder dips, but sustained growth. This cycle, we're in the soft landing zone, which is bullish. Institutions are ready. 2020 retail drove the pump. 2024, ETFs, funds, and suits are stepping in. Every rate cut equals more inflows, more credibility, and more upside. Crypto's not a side bet anymore. What it means for you: if the Fed cuts again soon, expect a dip, expect panic, then expect another shot at life-changing entries. The pattern is clear. Rate cut, dip, liquidity, rally. It's happened before, it's playing out again, and most won't see it coming until it's too late. Don't miss it, be ready and waiting. XRP, HBAR, ADA are now embedded in global frameworks shaping how institutions manage blockchain risks, aligned with ISO 222, MiCA, and DTCC oversight. This isn't noise, this is foundation of regulated crypto finance. Watch who they build with. That'll tell you everything you need to know. Don't sell your XRP too early, my friends. You need to wait for the swift ISO 222 11/2022/2025 deadline, worldwide liquidity injection, DTCC, worldwide tokenization, NDA's disclosure, banks using XRP publicly, ETFs greenlighted, dry dark pools, supply shock, ABCDs, Tether's Black Swan, the current market cap, 7+ trillion. On-chain finance deserves the highest level of investor protection. The same comprehensive approach that established Ondo as the most trusted platform for tokenized U.S. Treasuries extends these protections to tokenized stocks. Bankruptcy remote structures to isolate assets from issuer risk. Independent regulated custody for all reserve holdings. Full reserve backing ensuring every token is matched by underlying assets. Over-collateralization providing additional security. These institutional-grade protections will power Ondo's global markets, delivering the security standards investors expect for tokenized U.S. stocks and ETFs. And last up but not least, and you asked and we listened, Uphold is exploring ways to unlock yield on XRP, including testing XRP staking through Flare Networks F assets. Welcome to the world of smart contracts and DeFi opportunities, XRP Army. Stay tuned for the beta test. Well, that's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.